What's up, YouTube? So quick one. In this video, I I want to show you some of the things that I used to do in the past that made me went broke at that particular time. You know, in the past, I lost a lot of money. So I lost money. I was broke. I was. It was very difficult for me. So how I used to trade then, okay, that puts me in that position I'm going to show you. And the reason I want to show you this is so that you can compare, you can see what you are doing now and compare it to what I was doing then and see the reasons why. Probably if you see some similarity or something like that, that will let you know that you might actually be doing certain things wrong. Okay, so and before I take you to my computer screen, I started showing you some of those things how I used to trade in the past and uh, how those things were not working, those strategies were not working, and I will tell you why those strategies failed. So I will take you to my computer screen, but before then, there are a few things I want to say, and I want you to pay attention to it, because sometimes it's not about just technical analysis or fundamental analysis or showing you charts. Sometimes it's about what is in our mind. Okay, these successful traders, you need to understand their state of mind. You need to understand how they think. You need to understand how they reason. You need to understand certain things. So I want to also share certain things with you first before we go to our chat, but I'll be brief with it. Okay, when I started trading, I started with a binary option. I believe a lot of you might have heard about binary. Okay, so and when I was trading binary, I kept losing money back to back until I heard about Forex. And when I heard about Forex, I read about it and I realized that okay, this is more realistic because this is a real market. And binary option till today, I don't even know maybe it's a real market or not because I didn't really do much research. But binary option was what I started with because that was what they introduced me to then. But from there, I graduated into trading forex. So forex, I read about it and I was like, okay, this is an international market, and okay, I understand what it makes. This is real. So let me dive into this. And I started trading forex, and over the years, I've also come to realize that forex is not the best option for me. That stocks is the best option. So I started trading indices and stocks right now, and commodities. Commodities. I love commodities. Commodities like crude oil and gold. Those are some of my favorite commodities that I love trading. So over the years, I've come to realize certain things, and I will share all of that in this video. I will take you to my computer screen, okay? But you need to understand something. One of the biggest mistakes that made me went broke that time was because what I was doing, I had no knowledge about it. But I myself didn't know that I had no knowledge about these things. Like I don't have the comprehensible fact about trading. But because I just know one or two things how to press my buy and sell, I thought I'm a guru. I thought I was a guru already. So I started trading. And I started trading and I kept losing money. I went as far as borrowing money. Don't let me say I borrow money. My then girlfriend gave me money to trade with, and I blew the money. And there was a time I was lucky to make some profit while I was at place of work, and then a colleague of mine was like, "Oh, you're making money from these things," and I was like, "Oh, how can she join? How can she also join me in making money?" And I said, "Okay, if you bring money, I will trade. I will add it to the trading capital. I will trade, and I will give you I will be giving you a certain percentage from it." And I remember the lady gave me 20,000 naira, and I added to the capital that I had in my account, and eventually I blew that account as well, and it became a serious fight between myself and the lady because she insisted on collecting the money. I eventually paid. So the problem is that majority of people who teach forex or who talk about forex or who talk about trading in general, regardless whether you are trading forex, crypto, or whatever, who talk about these things don't even understand the subject itself. They just feel, oh, few technical supports, you see support resistance, take a buy position, and all those kind of things. They just feel that's all about trading, or trading is more than that. So enough of that. Let me just take you to my computer screen and show you some of those things that I used to do in the past that fundamentally, technically, that made me lost a lot of money. Okay, so let's go to my computer screen now. Let me show you quickly. Okay, so we are on my computer screen. You will see I put moving average on my chart. If you've been following this channel, you will know that I don't use moving average. For this particular video, I want to show you some of the things that I used to do before and why those things, the strategies, methods that I've used before that made me went broke. So let's just get right into it. The first one has nothing to do with moving average. So this is what happened. First of all, I will identify trend, not on higher time frame. Let's say my entry time frame is always 30 minutes. So I will identify the trend on daily time frame or 1 hour. So when I identify the trend, okay, and let's say the trend is giving higher highs like this, okay, higher highs, higher lows, okay, then the market move up to make higher highs. As soon as I see a retracement back to this particular point, okay, let's say I see a retracement back to this particular resistance, now price is now using as support, I will take a buy position. Okay, the same thing applicable in this case. As soon as I see price pull up, retrace to that particular this resistance, making it support, I will take a buy position. So that is the first strategy that I was using. But now the problem with this is that when the market starts, the problem with this that is my first strategy, take note. But the problem with the strategy is that when the price retrace here, okay, first of all, I don't know if price is going to bounce off from here. I have no strategy. I have no way of knowing if the market is still going to go back to the upside. Okay, I don't know. That's the first thing. Secondly, what I don't know is that when price retrace like this, I don't know, maybe the price is going to turn from here. Sometimes price may retrace so deep to this point. So imagine if you decide, so most of the time when I take a buy position here and put my stop loss just below here, you just discover that my price will hit it and move straight down before heading back, because it's not always balanced. So that is the second issue. So but now what makes me improve in this aspect is that, first of all, I have a way of knowing now. Let's say market is retracing down like this. Now I have a way of knowing if the market will continue that particular upward movement, and if the market is not going to continue, I will also find out. Okay, so then I don't have this knowledge. Now, talking about this retracement, you know, a lot of people will use Fibonacci, for example. Okay, they will put Fibonacci here and then try to put it here and then try to make sure it is Fibonacci retracement, because I use Fibonacci then too. It's part of the tool that I use to confirm this retracement. So you can see my 61 golden zone. You can see it is aligned. Okay, sorry. My 50% golden zone is aligned with the resistance here. So I will be looking for retracement around this zone. As soon as I see that retracement, I will just take a buy position. But the problem is that when that retracement happens, you don't know, maybe is the beginning to the end of this trend. So most of the time it will hold deep and hit my stop loss, and that time, so which means that sometimes when I take 6 trade, I may lose 3, I may win 3, sometimes I will lose 4, win 2, sometimes I will. So, and the risk management is also poor then. So before you know it, I blow the account. So that was, and I know a lot of people still trade this. There's nothing wrong in following, there's not, because I still trade like this. But the only thing that just differs now for me is the fact that before I buy this retracement, I want to first of all check if there is still momentum to the upside, if the market is still going to push to the upside. Because what happens most of the time is that as soon as this market retraces down to this particular point and you buy, you just see market move up a little and then retrace down. Okay, what that gives you is a price action pattern that says head and shoulder. So for me to know that this is not going to happen, that the market will still continue, I now have a way of checking. So that is one thing that proves my point. Sometimes the market will not just we try and push another high, but it's going to be of the same high with the previous high, giving you double top, and the market will just start coming down from there. So these are the things that are likely to happen. So I need to check if the market is going to make another highs. So that way, before I take this buy position, I have to check that. The second thing that I also need to know is that when the market get to this point, I'm not just going to enter. I will have to wait for some kind of price action confirmation before I take that position. The reason is because you don't know how deep this retracement is going to be, and if you set your stop loss, is going to hit your stop loss before probably pushing to the upside a little and then continue downward movement. So you can experience serious losses for not knowing when the market is, for not, you understand what I'm trying to say. So I have to wait for that. So these are the two things that I've actually improved in this case. So this is my first, that is my first strategy, that my first way of looking at price using Fibonacci to just trade retracement. And I will show you something on the chart now regarding that, so that you will see the effect of what things I'm talking about. Okay, so let me zoom. Okay. Okay, so let's look at this small trend here. Let's look at this small trend here, and let's just use this as an example. I just want to use this as an example. Okay, so let's say now price has moved down, retrace. If I decide to buy here, okay, definitely the price will drop down. Lucky for me. Then buy this retracement again. Yeah, the price come down. Lucky for me. But if I decided to buy this next retracement that happens here, the market is going to hit my stop loss. Okay, so that is the disadvantage. That is going to hit my stop loss. Okay, the reason is because you are not checking if the market is going to reverse here. Okay, we are not checking if the market is going to reverse here. So that is another thing. Okay, so you need to okay, you need to consider that. And then another thing that you need to understand about this thing is that if you are trying to trade like now, if you, what I've just explained, this strategy that I talked about, that I used to use before, if you use it in a bullish market on gold, if you use it in a bullish market, it is certain that most of the time you are going to get the trade right. But if you use it in a, if you use it in a small trade, in a like now, this is a trend in a bullish, this is a downward trend in a bullish market, because gold is a bullish market. So this is a downward, this is a bearish trend in a bullish market. So if you use it in a bearish market that is in a bullish market, like now this is a bearish market, if you try to use it, it means that at some point you are going to get it wrong and it's going to hit your stop loss. Okay, and even if you, let's say for example now you try to sell, maybe you see this retracement, maybe the retracement comes here and you be like, okay, let me sell from here, and you try to sell and it hits your stop loss, you may be considering that, okay, maybe the retracement is going to come back to this point like here. Okay, and then like here, maybe you are thinking that market is going to retrace again from here. Okay, maybe the market, when you are going to sell again, so many things, and you just see that the market just continue, and then you discover that you kept on losing trade. Okay, so one thing that I also don't understand then is trend, how to identify the true trend, so which is one of the things that I've just played out here. Okay, so that was my first strategy, and I can tell you, if you continue to trade like that without trying to check out those things, you will discover that you lose more than you win. And if proper risk management is not maintained and you are unable to deal with your your mental state, there's no way you can be profitable. So let's leave that and let's move to the second strategy. The second strategy is the reason I put moving average. So the second strategy, I used to use 21 moving average. Okay, and this 21 moving average keeps confusing me. The problem I have with moving average is that um, if you look at it, you discover that from here to this place is a bearish market, right? It's a bearish market. So what I used to do then is, just like this is a bearish market, I will have this trend line drawn, and I will also have my moving average there to trail it. So whenever the price hits the moving average, okay, I will take a sell position in this case now. So here now the price is almost there. I may take a sell position too, which is going to give me two wins, like first one here, second one here. So now price has gotten to the moving average again. I want to take another sell position. So, but in this case now, I have a loss. Okay, I have a loss. So you can see it doesn't favor. So let's say the price come up here, retrace here, I take a buy position, I will make a win. And if you retrace here and I decide to take another buy position, you can see this is a loss. You will discover that as I'm making, I'm losing. As I'm making, I'm losing. I'm making, I'm losing. And the reality is this here. If you want to be if you want to make money in the long term, you want to make sure that your winning is somehow consistent. It's about 90%, because if it is just 60-40, like you win 60, you lose 40. I have seen a lot of traders tell you that if you win 60 and lose 40, that means that in the long run, because if you look at the idea is this: if you look at the profit taking, it depends on where you are taking your profit. Actually, if you are taking, let's say for example, let's say for example, I enter here, you take profit here. Okay, you enter here, you take profit here. So where exactly is going to be your SL? Maybe you are doing your SL to profit ratio is 2:1. You know, in the long term, the fact that your profit is not the way you make money is not consistent, because there are times that you will lose back to back. This just happens to be fine in currency pairs, and in some currency pairs and in some other assets. You will lose more. Okay, you will lose more, because this is something that I've traded many times, and I've realized that I lose more than I win, and it's definitely not a good way to go. Okay, so moving average 21 is another tool that I used to use then, but now I don't use moving average. So let me just tell you some of the things that I now do now that is different. So let's say for example, whenever I see a retracement, I do not just want to take, for example, market pull up here. Okay, first of all, on higher time frame, daily time frame, this bearish movement is a retracement, and I wanted to buy here, but what I was waiting for here was that when the price pull up here, I was expecting the sell pressure to still come down. Okay, what's going on my network? When the price pull up here, I was expecting price to come down, at least this sell pressure to still show some level. So if I see that and I see candlestick confirmation here, I will take a buy position from here. I will take a buy position. I will take a buy position for it. That was my analysis. That was why I have this here. But the retracement didn't come, so I didn't take the trade. Okay, and that is because all this is a retracement. So another thing is, when that bullish move happens, there was another retracement which happens here. So unlike before, as soon as this retracement happens, I want to take my buy position. Okay, luckily the buy position actually works. It keeps going up, but majority of the time price might just continue to go down. So what I usually do now is that when this particular retracement happen, I want it to still give me that push to the downside. As you can see, it came down. So when I see this confirmation, that was when I enter. Okay, I want to see this price action pattern before I take my entry. Okay, so that is what I do now, and you will see that that's something like that happen here. After this pull to the upside, I was consolidation, then retracement. I wait for that double bottom here before I take this position. Okay, and I don't know. Yeah, so basically that is one of the things that I do now. Okay, those are not the only thing I check now before I trade, but the major errors is that you just jump into every retracement without knowing if that retracement is like if the retracement is not going to go beyond where it is. So you need to be extra careful by waiting for some kind of price action pattern to form afterwards before you take your position. And then moving average can be confusing. Like now, that 21 moving average only show trend, like just show how am I going to put it? It just show the recent trend. Like now, when this place was a bearish movement, that was where it shows. But the reality is that when you are trading a bullish market like gold now, you don't want to consider all this just leave all this selling pressure. Leave this selling. This selling should be an avenue for you to buy. So you should be considering buying, not selling this kind of asset. So moving average showing you all these things or following it is not a good idea. You should be looking to buy in the long run. Okay, so that's the idea. So this is what I want to show. If it is helpful, I want you to like and subscribe. And to join my mentorship class, check my bio. And yeah, basically that's it. If you have any question, put it in the comment section. I will attend to it.